I came across something recently that stopped me in my tracks, and the more I looked at it, the more I realized I needed to dig as deep as possible. XRP has just hit a milestone that I honestly did not expect to see so cleanly, so clearly, and so decisively in the United States. For the longest time, XRP holders have been dealing with this fog of regulatory uncertainty. We have lived through accusations, lawsuits, confusion, heated debates, and of course the classic back and forth around whether XRP is a commodity or a security. But now something huge has changed. XRP has officially been listed on a regulated United States spot exchange under the Commodity Futures Trading Commission. This is not a rumor. This is not wishful thinking. This is not someone on social media exaggerating something minor. This is real federal level oversight confirming XRP's place in the regulated financial system. And when I say it hit me, I mean it in the sense that you read something and immediately think, how did this slip past without a louder reaction? Because for XRP holders especially, this might be one of the most important and regulatory steps forward we have seen in years. The exchange is Bitnomial, a Chicago-based firm that already had Commodity Futures Trading Commission approval for its derivatives clearing operations. They expanded that framework into spot trading, and from day one they listed XRP. Not only that, but the exchange treats XRP as eligible collateral, the same way something like treasuries or other highly liquid assets are treated. That alone is massive, because it puts XRP in the same category as assets the traditional finance world already understands and trusts. The story becomes even more interesting when you follow how this unfolded. The Commodity Futures Trading Commission granted approval for Bitnomial to list XRP in early December 2025, and the moment I saw that timing, I had to start connecting the dots. We are seeing a shift in the United States where regulators, courts, and political forces are slowly but surely working out where digital assets fit. And here we have XRP, one of the most controversial and most discussed tokens in American regulatory history, standing on a federally supervised trading venue without a shadow over its legitimacy. That is not just symbolic. It has practical consequences for liquidity, for investor confidence, and for the entire conversation around digital assets within the banking system. And the thing that really made me lean in closer was the structure Bitnomial is using. It is not just spot trading. They are offering futures, perpetual swaps, options, and importantly, the ability to post XRP as margin. When an exchange under full Commodity Futures Trading Commission oversight says, yes, XRP is acceptable as collateral, that is an institutional green light that is nearly impossible to overstate. Because collateral is trust, collateral is confidence. Collateral says this asset is liquid, stable enough, and reliable enough to back financial risk. And that is a position XRP has never officially held in the United States until now. Now, as an XRP holder myself, I immediately started thinking about what this means in the real world. Traditionally, XRP holders have been constrained in the United States because major exchanges were hesitant to offer full XRP support due to the Securities and Exchange Commission lawsuit. A lot of liquidity sat offshore. A lot of institutional players simply avoided XRP to avoid unnecessary regulatory friction. But now the narrative shifts. When an asset is treated as collateral, you change the dynamic of how it is used. You are no longer just buying it or holding it for speculation. You are using it in financial contracts. You are locking it up in margin accounts. You are turning it into a working asset, not just a passive one. And that leads me to one of the overlooked aspects of collateral eligibility. When traders post XRP as margin, they are essentially removing that XRP from circulating supply for as long as their positions remain open. Imagine enough volume flowing through a platform like this. Suddenly, you start creating pockets of demand that reduce supply temporarily. If that dynamic scales, you eventually hit a phase where demand exceeds easily available supply. I am not saying this guarantees any price movement. That is not what I am saying. But the mechanics clearly create the conditions where a tightening of supply is absolutely possible. Seeing XRP move into the regulatory spotlight like this makes me reflect on the journey we have had as a community. We have seen every criticism thrown at XRP. Centralized, not centralized. Security, not a security. Too much supply. No, the supply is necessary for liquidity. It has been a long ride, but moments like this one show that the asset is maturing. Whether people like XRP or not, whether they understand it or not, the fact is XRP is now operating under federal oversight in the United States. And that changes how traditional players assess it. It also changes how you and I, as crypto holders, position ourselves. Because if XRP is now being welcomed into institutional structures, that suggests we may see more banks, more liquidity providers, more funds, more financial instruments, and more cross-border systems acknowledging XRP as a legitimate component of the digital financial architecture. Again, this is not about price prediction. This is about understanding the fundamentals of access. When a market becomes legally accessible to large players, liquidity deepens. When liquidity deepens, confidence grows. When confidence grows, long-term adoption slows down less and accelerates more naturally. But here is where the story gets even better. While I was researching the Commodity Futures Trading Commission listing, I stumbled across an announcement from Ripple's Chief Technology Officer talking about something called the XRPL Hub metrics being made public. Essentially, this is performance transparency for one of the main nodes Ripple uses. It is running smoothly, the data is open, and developers can connect to it with proper reservation protocols. And instantly, that reinforced one of the ongoing debates inside the XRP community, transparency around performance and programmability. So on one hand, we have federal clarity. On the other hand, we have open performance data coming from a core Ripple-run hub used to demonstrate health and consistency. The timing is interesting because transparency builds confidence. Confidence builds participation. Participation builds liquidity and adoption builds longevity. As I continued digging, I realized that this news has another layer that XRP holders should not ignore. For years, almost all United States crypto trading has happened on exchanges that were regulated only at the state level or treated as money service businesses. These agencies are not financial markets regulators. They do not have the same systems, the same oversight frameworks, or the same expectations. The Commodity Futures Trading Commission, meanwhile, is used to supervising futures, options, derivatives, risk management, clearinghouses, and institutions that deal with billions of dollars in open interest. So when the Commodity Futures Trading Commission steps in and says XRP belongs in this environment, it elevates XRP's status dramatically. This kind of shift does not just happen out of nowhere. It is usually the result of long-term structural alignment. And it made me think about what comes next. Could we see more regulated United States platforms listing XRP? Probably. Could we see more institutional grade trading products based on XRP? Also very possible. Could we see an uptick in analysts and research desks covering XRP now that it operates under familiar oversight? Absolutely. And this is where I want to pause and talk about something important. I have said this many times, but I want to stress it again because this landscape is changing so quickly. You never know when an exchange might go down or restrict access or go through maintenance at the exact moment you need liquidity. This is why I have a strategy where I sign up to as many exchanges as possible, complete their verification processes when required, test deposits and withdrawals, and basically have a plan A, plan B, plan C, and even further fallback options if needed. It is not paranoia, it is simply being prepared. And speaking of exchanges, I have partnered with Kraken to offer something genuinely helpful for people who want to get set up with an additional exchange. Anyone who signs up through the affiliate link on my website, completes their verification if needed, and trades $100 worth of any non-stablecoin crypto within 30 days will receive $25 of XRP as a reward. It is a limited time offer. It supports the channel, and it gets you set up with another exchange that you can rely on when markets get crazy. Again, the affiliate link is on my website, and using it supports the channel. Before I go any further, it is time for the mandatory disclaimer that must be spoken exactly as written. So here it is. This might shock you, but I'm not a financial advisor and nothing in this video is financial advice. Cryptocurrencies are highly volatile and you could lose all the money you invest. Always do your own research and consult a qualified professional. Your investments are entirely your responsibility, and you should know that nothing is ever guaranteed when it comes to investing. Neither I, this channel, nor YouTube are liable for any losses. This video is for entertainment and educational purposes only. Now let's get back into the story. When you look at the broader landscape, this regulatory milestone suggests the beginning of a new narrative for XRP holders, one that is based not just on speculation or community enthusiasm, but on legal recognition and infrastructure integration. If you step back and look at the crypto landscape as a whole, it becomes obvious that not many assets have this level of clarity. Even some of the most popular tokens do not have Commodity Futures Trading Commission approval. Many will never have it. That makes XRP a standout. And as adoption broadens, it becomes even more important for holders to protect their assets properly. Leaving your crypto on exchanges long-term is never wise. If an exchange is hacked, seized, frozen, or simply has an outage, your funds could be at risk. This is why I always recommend using a proper hardware wallet for long-term storage. And if you ever choose to get a ledger device, make sure you always buy directly from the official manufacturer. Never buy from third-party resellers because there have been cases where fake devices were sold. For anyone wanting to pick one up, there is an affiliate link to Ledger on my website, and using that link supports the channel. Now, while I was deep in research mode looking into these Commodity Futures Trading Commission developments, I also revisited something I have spoken about several times already: Unity nodes. It is a project backed by World Mobile and Minutes Network that uses software licenses to grant access to earnings derived from network activity. I bought a Unity node license bundle that included 200 licenses. And my plan is simple. I will start small. I will test with 10 phones. If it is smooth, if it flows nicely, and if the earnings feel consistent, then I will scale up. The nice thing is that I can choose to be paid in Bitcoin, Ethereum, ADA, or XRP. So if the test works, it becomes a way to accumulate more crypto passively over time. I am not hyping Unity nodes. The concept is not new to anyone here because I have mentioned it plenty of times. It is still early. People should still do their own research. And if anyone is curious, I have added a link in the description where you can read the light paper and explore how the rewards calculator works. But as part of my wider strategy, Unity nodes fit into this theme of diversifying how I accumulate assets and exploring new tools connected to real networks. As XRP continues to be integrated into more regulated frameworks, communities like ours become even more important because understanding the implications is not always straightforward. That is why I always encourage everyone to join the free Discord. It is a place where you can ask questions, share ideas, learn from others, and stay informed when news breaks. And if you want to take things further, Cheeky School is where I host structured educational courses covering trading, portfolio management, and risk management. Anyone who wants to level up their skills can use the discount code YT50OFF to get 50% off any course. Now let's zoom out and understand why this Commodity Futures Trading Commission listing matters so much. XRP is now inside the same regulatory umbrella that traditional markets rely on. The Commodity Futures Trading Commission supervises some of the largest and most complex financial systems in the world. These systems depend on trust, transparency, liquidity, and risk controls. For years, crypto was kept at arm's length from this level of oversight, and for legitimate reasons. Many crypto platforms simply were not ready. But the fact that XRP is now operating under this structure puts it on a very different playing field. This development also signifies something deeper. It suggests that regulators may be more willing to separate actual utility-based projects from speculative tokens. XRP has always been a utility-focused asset designed for settlement, liquidity provision, and cross-border messaging between value networks. The Commodity Futures Trading Commission's approval reinforces the idea that has a functional purpose that regulators recognize. But let me bring it back to the community level. As XRP holders, what does this mean for us? First, it means we now have more regulated on-ramps and off-ramps. Second, it means the stigma around XRP is fading. Third, it means banks and institutions may feel more comfortable exploring XRP-related products. Fourth, it means less confusion for new investors. And fifth, it means that XRP's role in the digital economy becomes easier to understand, measure, and trust. There is also an interesting emotional dimension to all of this if you have been part of the XRP community for a while. There were times when the negativity was overwhelming. People questioned why anyone would hold XRP. They did not look at its design, its technical structure, or its use case. They saw headlines and dismissed it. But now, one of the most important regulators in the United States is acknowledging XRP through action, not just commentary. When I step back and think about the future, I see XRP being a bridge between institutional finance and crypto-native systems. I see large settlement networks exploring XRP because they now have a regulated channel for exposure. I see traders using XRP on regulated derivatives exchanges. And I see a path where XRP is no longer discussed as a controversial asset, but as an essential component of digital value transfer. And that brings me to something important. As an investor, whether you hold a little XRP, a moderate amount, or a large bag, the best thing you can do is stay informed. That is why communities like ours matter so much. And that is why I always encourage people to join the free Discord. Use the educational resources at Cheeky School if you want to learn how to navigate markets, protect your assets with proper hardware wallets, test exchanges ahead of time so you have fallback plans, and take advantage of offers like the Kraken partnership if you need another reliable trading platform. The landscape is changing. It is becoming more regulated, more mature, and more interconnected. And for an asset like XRP, which has always existed at the intersection of finance and technology, that environment is exactly where it thrives. So if you take anything from this video, let it be this. We are witnessing one of the most significant regulatory shifts for XRP since the early days of the Ripple lawsuit. And it is happening quietly but meaningfully at the federal level. It is changing how XRP is used. It is changing who can access it. It is changing how institutions perceive it. And it is setting the stage for the next chapter of crypto integration in the United States. And with that, if you found this useful, make sure you subscribe for more.